The American way to wealth is loud. It is stressful. It is full of flashing red and green lights, breaking news alerts, and the constant pressure to do something right now. We are told that if we are not moving, we are losing. We are told that money sleeps for no one, so you must never sleep either. But imagine for a moment that this is wrong. Imagine that the noise is not the sound of opportunity, but the sound of inefficiency. Imagine that the more you look at your portfolio, the less it actually grows. There is a Swedish word that explains a different path, lagom. It translates roughly to not too little, not too much, just right. It is a word that describes balance, sustainability, and a deep refusal to go to extremes. While Wall Street screams for more, for faster, for higher, the Swedish wealth mindset whispers for enough, for steady, for longer. And here is the secret that the financial news channels will never tell you. The silent way often wins. The boring path often leads to the most exciting destination. You have likely clicked on this video because you are tired. You are tired of the anxiety. You are tired of the fear that a single headline could wipe out your hard work. You are tired of the hustle culture that demands you trade your life energy for numbers on a screen. What if I told you that the wealthiest families in the North, the dynasties that have kept their money for generations, do not trade every day? They do not watch the news with panic. They do not try to beat the market this quarter. They have built a system that allows them to ignore the noise and let time do the heavy lifting. In this video, we are going to explore the mathematics of silence. We are going to look at why doing less is often the most profitable decision you can make. We are going to build a portfolio strategy that beats Wall Street, not by outsmarting them, but by outlasting them. If you are ready to stop chasing and start building, welcome to Mindset for Wealth. Please subscribe to the channel and let us begin this journey to a calmer, richer life. Current word count estimate for this section, 300 words. Shall I proceed to the first part of the body? Or would you like to adjust this introduction?
Welcome to Mindset for Wealth, where money meets mindset.
Let us talk about the trap of activity. In almost every area of life, we are taught a simple equation. More effort equals more results. If you want to build a bigger house, you must lay more bricks. If you want to run a faster marathon, you must run more miles. If you want to learn a new language, you must study more hours. It is natural, then, that we bring this same logic to our money. We believe that if we want to get richer, we must do more. We must read more news. We must analyze more charts. We must make more trades. We feel that if we are not clicking buttons, we are being lazy. But the financial markets do not follow the laws of physical labor. In the world of investing, the correlation between effort and reward is not just zero. It is often negative. The more you touch your portfolio, the more likely you are to break it. This is what we call the activity penalty. Let us look at the mathematics of this penalty, and I promise you, it is simpler than Wall Street wants you to admit. Every time you buy or sell, you create friction. There are fees, even if they are hidden in the spread between the buy and ask price. There are taxes, which are the silent killer of compound interest. In the United States, if you hold an asset for less than a year, you are taxed at your ordinary income rate. That can be 30%, 40%, or even more depending on where you live. If you hold that same asset for the long term, the tax rate drops significantly. This means the active trader starts every single year with a handicap. They must outperform the market by a massive margin just to break even with the person who did nothing. But the cost is not just financial. The greater cost is behavioral. When you are constantly active, you are constantly exposing yourself to emotional triggers. You see the market drop by 2% in the morning. Your brain, evolved to survive in the wild, perceives this as a threat. It screams at you to do something. Sell. Protect what is left. So you sell. Then, 3 days later, the market recovers and goes up by 4%. Now your brain screams again. You are missing out. Get back in. So you buy. You have just sold low and bought high. You have done the exact opposite of what generates wealth. And you did it not because you are unintelligent. You did it because you were too close to the noise. Wall Street loves this. The entire financial industry is built to encourage this behavior. Think about the trading apps on your phone. They are designed like casinos. They have bright colors. They send you notifications when a stock moves 5%, begging you to open the app. They celebrate your trades with digital confetti. Why do they do this? Because they do not make money when you hold. They make money when you trade. They make money on the volume of your anxiety. Now, compare this to the Swedish approach, or what we might call the Lagom portfolio. Imagine an investor who buys a broad, diversified index fund. They set up an automatic transfer from their bank account every month. And then they do the most difficult thing in the world. They walk away. They do not check the app daily. They do not read the panic headlines. They focus on their career, their family, their health. They treat their portfolio like a bar of soap. The more you handle it, the smaller it gets. Over a period of 10 years, the difference between these two investors is staggering. The active trader has paid thousands in taxes. They have missed the best days in the market because they were sitting in cash, waiting for the perfect moment to re-enter. They are exhausted. The silent investor has paid minimal taxes. They have captured every single day of growth. They are rested, and almost mathematically guaranteed they are wealthier. It is a paradox that is hard to accept. To make more money, you must be willing to be bored. You must be willing to do nothing when every fiber of your being wants to do something. This is the high cost of noise. It convinces you that complexity is sophisticated. But in reality, complexity is just a way to hide the fact that the simple truth works better. Current word count estimate for this section, 750 words. Shall I proceed to the next section, body part 2, the Lagom philosophy? Now, let us step away from the chaos of the American markets and look north. Let us try to understand the philosophy that makes the Swedish model work. It begins with that single word I mentioned earlier, lagom. If you look it up in a dictionary, you might see it translated as moderate or sufficient. But to a Swede, it means something much deeper. It is the feeling of sitting around a fire where everyone has enough warmth, but no one is burning. It is the feeling of a meal where you are satisfied but not stuffed. It is the rejection of excess, not because you cannot afford it, but because excess brings burden. When we apply Lagom to our money, it changes everything. Most investors operate in extremes. On one side, we have the extreme of fear. This is the person who keeps all their money in a savings account. They feel safe because the number never goes down. But in reality, they are slowly bleeding to death. Inflation is eating their purchasing power year after year. This is too little risk. On the other side, we have the extreme of greed. This is the person who puts everything into the latest hype stock, or a volatile cryptocurrency, or uses leverage to try and double their money in a month. They might win once, but eventually the house always wins. They take on the risk of total ruin for the chance of a quick thrill. This is too much risk. The Lagom portfolio seeks the perfect middle ground. It accepts that we must take risk to grow our wealth, but it demands that the risk must be survivable. It asks a very simple question. What is the allocation that allows me to sleep perfectly well at night while still compounding my wealth faster than inflation? For many, this looks like a portfolio of global index funds. It is owning a piece of the entire world economy. If one company fails, you do not panic, because you own 5,000 others. If one country goes into a recession, you are protected, because you own companies in other regions that are thriving. You are not trying to pick the needle in the haystack. You are simply buying the haystack. This philosophy is deeply rooted in the Nordic culture. In Sweden, there is a strong social safety net. People do not need to gamble in the stock market to pay for their healthcare or their children's education. Because the basics are covered, they are free to think long-term. They do not invest to pay next month's rent. They invest to build a foundation for the next 20 years. This is a critical distinction. When you invest out of desperation, you make mistakes. You chase quick returns because you feel you need the money now. But when you invest out of stability, you make rational choices. You become patient. You understand that wealth is not a sprint to the finish line. It is a slow accumulation of freedom. The Lagom mindset shifts your focus from income to equity. The American mindset often asks, how much cash flow can this generate for me today? The Swedish mindset asks, how much will this asset be worth when I pass it to the next generation? When you stop needing your portfolio to perform for you this week, you release the pressure. You stop checking the price. You stop reacting to the noise. You find the balance where your money is working hard enough that you do not have to, but safe enough that you never have to worry about it disappearing. This is the power of just right. It is not exciting. It will not make you a millionaire by next Tuesday, but it is the only strategy that ensures you will actually keep the wealth you build. Current word count estimate for this section, 650 words. Shall I proceed to the next section, body part 3, the emotional peak? Let me tell you a story of 2 different mornings. It is a story that plays out every single day across the world. The first morning belongs to the person who believes they must conquer the market. Let us call him the hustler. His alarm goes off at 5 in the morning, but he is already awake. He reaches for his phone before he even says good morning to his partner. The blue light floods his eyes in the dark room. He opens his trading app. The market in Asia is down. Futures in New York are sliding. Instantly, his heart rate spikes. A chemical flood of cortisol enters his bloodstream. He feels a tightness in his chest. He calculates in his head how much money he has effectively lost while he was sleeping. He rushes to the shower, but his mind is not there. His mind is on a chart. He eats his breakfast quickly, staring at a screen, reading headlines about interest rates and earnings reports. He is physically present with his family, but mentally, he is thousands of miles away, trapped in a digital battle he cannot control. He tells himself he is doing this for them. He is working this hard, stressing this much to build a future for the people he loves. But in the process, he is missing the present. Now, let us look at the second morning. This belongs to the Lagom investor. Let us call him the owner. He wakes up when the sun rises. There is no alarm. He does not touch his phone. He goes to the kitchen and brews a pot of coffee. He sits by the window and watches the steam rise from his cup. He knows that the markets in Asia might be down. He knows that New York might open in the red. But he does not check, because he knows that whatever happens today is just a single drop of rain in an ocean of years. He spends the morning talking to his children. He goes for a walk in the woods or heads to his job with a clear mind. He is not trying to predict the future. He is already prepared for it. He owns a piece of the global economy, and he trusts that over time, human innovation will drive value up. He does not carry the weight of the world on his shoulders. Now, ask yourself this question. Who is actually richer? The hustler might have made $1,000 this morning by timing a trade perfectly. But what did he pay for it? He paid with his peace. He paid with his attention. He paid with his health. This is the hidden tax that no one talks about. Stress is a tax. Anxiety is a tax. Being irritable with your spouse because the stock market is down is a tax. We are taught that money is the ultimate goal, but money is just a tool. It is meant to buy you freedom. It is meant to buy you the ability to own your time. If your method of making money steals your time and destroys your peace, then the tool has become the master. You have built a prison and called it a portfolio. The Lagom philosophy offers you a key to unlock that door. It validates a truth that feels almost rebellious in our hyperactive world. It is okay to be boring. It is okay to not know what the S&P 500 did today. It is okay to disconnect. In fact, it is more than okay. It is the source of true power. When you are no longer addicted to the noise, you regain your life. You realize that wealth is not just the number in your bank account. Wealth is the ability to wake up in the morning, drink your coffee, and feel absolutely nothing but gratitude. That is the emotional peak of the Lagom lifestyle. It is the realization that you have already won simply by refusing to play the game on their terms. Current word count estimate for this section, 600 words. Shall I proceed to the next section, body part 4, the strategy, doing less, better? So, how do we actually build this? How do we take this philosophy of Lagom and turn it into a concrete strategy that you can apply to your money today? It requires a shift from trying to be smart to trying to be disciplined. The first step is to simplify your asset selection. Stop trying to find the next big technology stock. Stop trying to predict which sector will boom next year. Instead, build the haystack. For the core of your portfolio, look for a single, low-cost index fund that tracks the total global stock market. When you buy this, you are effectively hiring the CEOs of thousands of the best companies in the world to work for you. You are buying a tiny slice of human ingenuity wherever it happens to occur. If the United States economy booms, you win. If the emerging markets rise, you win. You have removed the risk of picking the wrong country or the wrong company. The second step is automation. The enemy of the Lagom investor is their own brain. If you have to manually transfer money to your investment account every month, eventually you will fail. You will have a month where you feel poor, or a month where you want to buy a new gadget, or a month where the news scares you. And you will hesitate. That hesitation is costly. The solution is to remove your decision-making power entirely. Set up an automatic transfer from your checking account that happens the day after you get paid. Treat your future wealth like a bill that must be paid, just like your electricity or your rent. When the money moves automatically, you do not feel the loss. You simply learn to live on what is left. This is how you make the process effortless. The third, and perhaps most important rule, is what I call the coffee break rule. In Sweden, there is a cultural institution called fika. It is a moment in the day to stop, have a cup of coffee, and reset. It is non-negotiable. As investors, we need to apply the fika rule to market crashes. There will come a time, perhaps soon, when the markets dive. The headlines will scream about recession. Your friends will talk about selling everything to go to cash. When this happens, the American instinct is to act, to run, to do something. The Lagom instinct is to pause. When the market is bleeding, that is your signal to do absolutely nothing. Go make a cup of coffee. Sit down. Remind yourself that you are a long-term owner, not a short-term trader. Remind yourself that historically, every single market crash has been followed by a recovery. By selling in a panic, you are simply crystallizing a temporary decline into a permanent loss. By doing nothing, you are allowing the system to heal itself. This is the art of doing less, better. You are not being passive because you are lazy. You are being passive because you are strategic. You have built a machine that functions without your constant tinkering. And because you are not spending hours staring at charts, you have the time to do the one thing that actually increases your wealth potential more than anything else. You have the time to improve your skills, earn more income, and feed the machine. Current word count estimate for this section: 500 words. Shall I proceed to the final section? The outro? Silence is not empty. It is full of answers. In a world that is constantly shouting at you to buy more, do more, and fear more, choosing to be silent is a radical act. It is an act of reclaiming your power. We have covered a lot of ground today, from the high cost of overtrading to the deep peace of the Lagom philosophy. But if you take only one thing away from this video, let it be this: your wealth is not measured by how busy you are. It is measured by how free you are. The goal of investing is not to win a game against Wall Street. The goal is to build a life that you do not need to escape from. I want to thank you for spending your time with me today. I know that time is the only asset you can never earn back, and I am grateful you chose to invest it here. If this calmer, quieter path to wealth speaks to you, I invite you to join our community. Subscribe to Mindset for Wealth. Together, we will continue to explore how to build a fortune without losing your soul. And if you want to understand exactly why the financial news tries so hard to scare you and how to immune yourself against it, I recommend you watch this video next. It will complete the picture we started painting today. Thank you, and until next time, keep your mindset steady.